Hey everyone, Nvidia reported fantastic fourth quarter fiscal year 2024 earnings results that beat even the optimistic expectations. So in this video, I'll review Nvidia's latest quarterly results. I'll also update my recommendation for Nvidia stock. Remember, coming into the quarter, I had Nvidia stock rated as one of my top 24 stocks to buy in 2024. You're going to want to tune in to see if I'm changing that recommendation as my alarm goes off or if I'm decreasing it after these earnings results. So let's jump right in and let's check out these numbers.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so revenue came in at 22.1 billion, which was up a whopping 265% year over year. Gross profit margin came in at 76%, which is up by 12.7 basis points year over year. Diluted earnings per share at $4.93 was up 765% year over year. Phenomenal numbers to be sure, even above what the optimistic expectations were looking for here with Nvidia. Remember, in its latest quarterly commentary, management told investors to look for revenue of 20 billion and gross profit margin of about 75%. Nvidia reported revenue of 22 billion and gross profit margin of 76%. So it's one thing to beat on your revenue expectation, but at the expense of your profit margin because you offered more incentive, more promotion to sell more product. That wasn't the case here. Nvidia beat its guidance for revenue by 10%, by 2.1 billion to be precise, and its gross profit margin was better than it told investors to expect. So even though optimism and expectations surrounding artificial intelligence purchasing was already high, it was even better than expected. It was even better than expected. So unsurprising here. Seems like nearly all the data points we're getting with these AI related companies, customer demand seems to be better than expected, much more than what the market anticipated. So more specifically, its segment level revenue, data center is where Nvidia reports its AI segment sales, and that was up by 409% year over year to 18.4 billion, as the segment has quickly risen to become the most dominant portion of Nvidia's business. You can look back at the fourth quarter of 2023. It was certainly the best segment at 3.6 billion, but it was only twice that of its gaming segment at 1.8 billion. Now at 18.4 billion, it's nearly, what is that, more than six times the gaming segment. So it's become a more critical, a more heavily weighted part of its business now because of the surge from AI. Interestingly, the automotive segment is one that I've been watching because I also follow a lot of EV stocks and a lot of car manufacturers. And this was not a surprise. Automotive revenue was down 4% year over year to 281 million, down from 294 million. Further evidence that the auto market is struggling from customer demand viewpoint. Sales are falling for EVs, especially. The overall car market is still doing okay, but for EVs more specifically, demand is falling, and that's crimping some investment in some of these advanced cockpit technologies, and driverless technology investments are not as robust as they were last year. So to get more clarity on what happened in the quarter for the data center segment, Nvidia said these increases reflect higher shipments of the Nvidia Hopper GPU computing platform, which is used for the training and inference of large language models, recommendation engines, and generative AI applications, along with InfiniBand end-to-end solutions. So AI, all things AI, driving this surge in data center revenue for Nvidia. In the fourth quarter, large cloud providers represented more than half of our data center revenue, and they're doing that to support both their own internal workload needs and external customers. So these large cloud providers use NVIDIA's GPUs for themselves, but they also sell access to those NVIDIA GPUs to other cloud customers. So these large cloud providers are Amazon, AWS, Google Cloud, Microsoft, and others that are not only using these NVIDIA GPUs for their own needs, but they're also selling access to their clients in their cloud business. Data center sales to China declined significantly in the fourth quarter due to the US government licensing requirements. So Nvidia said that sales to China were going to decrease, but they were going to be more than offset by sales to other customers. And so as the quarters go on and Nvidia sells less and less to China, that risk is decreasing because now they have less business to lose to China because they've already decreased their business to that region significantly. So they've shifted, and now if that area comes back with maybe they're considering and they've tried selling a lower tech version of their latest GPU and see if that can get approval, licensing to get sent. But they've got so much demand for their GPUs that they're more than offsetting that. And Nvidia today is a less risky business as it stands with China than it was 3 quarters ago when more of its sales were going to China. So incrementally, it's getting de-risked from that region, although this isn't great news, and hopefully Nvidia can gain access again and boost sales. But right now they've got all the demand they need, it seems like. So the automotive segment, the year-on-year decrease for the quarter was driven by AI cockpit, and that was offset by increase in self-driving platforms. So they offset each other, but there was still a decline 4% year over year. And here are some very impressive numbers. Cash flow from operations in the fourth quarter was $11.5 billion. That was up by more than 5x from $2.2 billion a year ago and $7.3 billion from the previous quarter. For the fiscal year, cash flow from operations was $28.1 billion. That was up more than or roughly 5x from $5.6 billion a year ago. So it's not just sales and profit, cash flow is coming along as well. A truly comprehensive, solid increase for Nvidia around the board. Excellent quarter, much better than investors were expecting, including myself. And then finally, let's look at the outlook. Forecasting $24 billion for the next quarter and gross profit margins between 76.3 and 77%. So revenue is going to increase incrementally another $2 billion or so, 10% increase quarter over quarter. The year over year increase is going to be much larger. And then gross profit margin is also going to increase from roughly 76% to a midpoint of about 76.5%. Again, Nvidia not only delivering an excellent quarter, but saying that next quarter is going to be even better. Telling investors, if you thought this quarter was good, wait till you see our next quarter. It's going to be even better than this one. So all around, very good news for Nvidia and Nvidia stock investors. The stock price was up about 5% in the after hours as of this recording, 5.36%. Of course, Nvidia stock was down a little bit heading into earnings because it had risen so much already heading into these results. Of course, I had Nvidia stock rated as one of my top 24 stocks to buy for 2024. I made that recommendation around December 30th, and I'm reiterating that recommendation in this video. I'm keeping Nvidia stock rated as one of my top stocks to buy in 2024. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.